Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just want to have a brief update on what's going on the Bitcoin chart. Of course, I did put out a video last night, really in the early AM actually this morning around, 1 AM, something like that, to try to give you guys a heads up that we were very, very likely to deflect from $24,000. And I gave a lot of reasons why that was likely to be the case. And while, 100 or so of you tuned in to the episode prior, and like almost 200 people, tuned in to the episode before that, I only had 20 views on this, Workshop Wednesday video. So I think you guys just want to trade. You don't want to learn, perhaps, but it is important to check out those videos if you want to make sure that you're getting up-to-date information on how the price action is going, because I will often just put in, some type of a trading update even on those videos that aren't necessarily just primarily focused on trading. So be sure to check out the Workshop Wednesday episode. It's full of a lot of good information. But just to summarize briefly, for those of you who just want to save a little time, I have updated the levels because we are officially in a new trading day. And right now the 12-hour RSI and the daily RSI are actually overlapping. If we break down lower than we are right now, then we're going to turn our RSIs to the downside. So holding this level, basically 23,300, is going to just keep us bullish on top of everything. All the indicators are going to be bullish if we can hold this 23,300 level. Now, the purpose of me organizing my thoughts like this is that you can very clearly see when we start to lose our indicators. And we're going to lose our 12-hour MACD, so basically the next half day, if we break down below 22,750. Okay, that's this number right here. And, guys, if we lose that, most likely we're going to test our supportive region, and our supportive region starts to break down around $22,230. You may have some grace, until $21,600. But effectively, you break down into this region, you start losing a couple major supports, basically your Stoke and your MACD on the daily turn down. And when your MACD and your Stokes turns down, then most likely you're going to continue downward, and you're also going to break your RSI to the downside. You break the RSI to the downside, and you can just lose your support completely. So this one right here is pretty much a critical support. And if we want to maintain our momentum, we really have to hold above this 22,200, and let's just call it 50 region. Okay, from there it gets pretty dicey. Now we did dip down into this bullish area where I mentioned that, if we dip down into this area, it's not a big deal. It's still pretty bullish. We can easily recover from this blue zone, this blue zone here. That's why I'm marking these things out this way. But of course, we could have a shaky time with it if we do break down in these areas. Guys, let's go ahead and just throw on the old indicator that was showing us that we were pretty, worn out on the daily here. You can see that we did violate our channels. And in violating our channels up here, there was just a good chance that 24,000 was going to be our limit for this move, and that most likely we were going to get smacked down. Now, if we have a pullback all the way down to the middle of these Keltner channels, then that really wouldn't be a big deal. You can see how all of these things are aligning together, okay, guys? So I'm not just making these numbers up, I'm not just pulling weird levels, out of my butt. I'm really calculating all of these things for you. And so if you do have a chance to grab these episodes when I do put them out, I'll try to give a little update to these levels every time I make a video, just so that you can have a little assurance. Now, you can also see that if we lose the middle of these Keltner channels, then of course, most likely we're going to just be testing the bottom of it. So again, this is our critical range, and this is our bullish range. And you can see that that aligns very well with horizontal supports and resistances. It's just that I prefer dynamic numbers, and I prefer EMAs, and I prefer zones and bands rather than just horizontals. I personally prefer the dynamic metrics. Of course, we do have this cloud of resistance over us if we do happen to push up again in that $26,000 area, and we can see that by our mean reversion, where we will be approaching our mean reversion around 27,500. And we also have the weekly 200 EMA right here. That's this orange level right here. I'll just go ahead and type that out. Weekly 200 EMA, and that's going to act as a very tough barrier to break, okay? And I was mentioning that it was very unlikely that we were going to break this barrier as well, which is the 10. I actually used the 9, the weekly 9 EMA. Most people use the 10. I use the 9. It's just a little bit faster in terms of its response, but they're usually in approximately the same level. And then you may not even see it, but I have this really thin orange line right here, and that's the weekly 200 MA, and that's the one that was giving us a headache previously, but we actually did break through it bullishly. And so the reason to keep it there is that we are maintaining a bullishness as long as we can hold on to that 200 weekly EMA. But what would really make us really bullish is if we can capture the weekly 9 EMA and then perhaps get on top of this weekly 200 EMA and even challenge up here the weekly 20 EMA. So those weeklies are very significant because they actually represent levels which can create squeeze plays on the EMAs. So if I jump over to the weekly and then I take off, our channels over here and throw on the EMAs, you can see that if these, if these bands start squeezing up, then our price action can get squeezed up with them. Just like if they curve down, our price action can squeeze to the downside. We really have to capture that red level, that orange level, and then that yellow level here, and that could just make a monster squeeze play to the upside. Okay, you can see they can fail, but it is a significant rally when we do catch them. And so again, like going back to our daily, let me turn off these EMAs because they kind of block the price action. We get back into our horizontals. You can see there's that yellow band, the orange band, and the red band. And so those are going to be the bosses that we have to defeat in order to really make a bullish run. Now, again, this whole region here is going to be very, very resistant to us. And so there's a good chance that we get slapped down around 26,000, maybe even this wick over here around 25,000. And if we cannot penetrate this 10 weekly EMA, right, which we got pretty hard rejected off of it, that's just going to be it's basically going to be very bearish, okay? It means probably we're going to just continue our trek to the downside if we can't even get above this weekly 10 EMA. However, does that mean that we can't pump, that we can't get another wick up into this area? No, of course we can. It just means that, maybe we get rejected. There's still a lot of sell-off here. And you can see the top of our wick over here is also around 26,000. So if we get smacked down on this candle, which we're attempting to traverse to the upside, we're trying to reclaim this candle. If we get smacked down, in that $27,000 area, there's just a lot of things going on in that area. We have the mean reversion, we have the 200 weekly EMA, we have our candle wick over here to the downside, and then we just have a bunch of other things that I've mentioned in the past, so I won't bring them all up. But you guys can see the state of play right now, which if you're entering into trades, it's a bit risky. And the reason for trying to reach out to you guys with regards to the fact that we were going to get most likely slapped down at 24,000, which by the way was a brilliant call. So, congratulations to everyone who actually watched the Workshop Wednesday episode because, you 20 guys, you got the inside scoop. You guys were prepared for this very hard rejection right here. And so, congratulations to you. And you probably could have also scooped up, some, repositions, some buybacks in this lower area and just taken a massive amount of profit, from how we had moved up here. Take your profit and then buy back when we get back into these juicier levels. Now, if we are going by the daily, you can see that we are starting to get a little bit toppy, a little bit overheated here. Our oscillators are starting to show a slight bend to them. They're all starting to bend a little bit. And so, if we do have a greater pullback, perhaps to this green support zone, then don't be too surprised and don't say that I didn't warn you, because I absolutely did. This is now the second episode in a row of warning you guys that there could be a potential pullback. And while we did get a pretty good pullback here, you can see this candle, just this massive candle to the downside, just boom, right? We lost like 6%, which could be an incredible amount on some of your altcoins. It could be like 12%. It could be like, 25% on some of those altcoins. We were able to catch support right in these areas that I calculated, where if we were going to remain bullish, that would be the area that we would likely wick to and respond to. Now, the question is, can we hold on to this while we've been so overheated? And when you see these type of candle wicks, just in the past, they do tend to signify a greater pullback. And if we're going to continue this kind of channel bullishness, right, then we broke out of the channel and we're going to start a new channel perhaps, then, our path might look something like this, right? Where we bust out into a new channel. But if we break down below this level, then we're actually talking about just exploring our previous level. And that's why we have to bounce off the mid channel of it. If you can imagine with me here, the middle of that channel. Otherwise, we're getting sent to the bottom of it, and it's very, very risky to be here, because if we go a little bit too fast, we can break back down into our mega channel that we've just had for like 4 months, and that could send us, all the way down, right? So it's a tenuous situation. That's the reason why I'm explaining this twice instead of just leaving it to the last video. I want you guys to be well practiced in taking your profits at likely resistance points. And then if you guys still feel bullish, if you guys feel like, this market is getting a little strong, things look a little bit stronger, then to, plan buybacks in these type of bullish areas, or at least at support, and then maybe having, a stop loss under wherever you buy at, just in case we do violate whatever, concept that you have in your mind. But I'm going to go ahead and extend this channel just a bit, because we do see that there is the potential for us to just bounce off of it, or to break under it and come back towards this channel, which, you know what, I'm actually going to say the bottom ends here, and hopefully we are using the mid channel of this range, in the future. But all right, guys, I'm going to wrap it up here. Just a quick 15-minute video to explain some of those thoughts and help and hopefully get you oriented in case you were caught off, guard by this drop. I did issue a warning very early this morning, and so for those of you who watched that, hopefully you were able to benefit from it. Stocks are still in a pretty bullish position here, looking a little bit toppy on the S&P, but otherwise still threatening to take out those gaps on the chart, which they didn't really do. So still a bit of indecision in the chart, and I'm not really sure if they're going to take out and try to grab these lower gaps. Right? We have these like little lower gaps in the price action, or if they're going to go for the higher gaps. But so far, still looking pretty bullish. Bitcoin maintaining that bullish zone over here, that bullish kind of control zone that I've marked out. And while this may not be how everyone else charts, this is how I do it, and I hope you guys appreciate it. All right, that was your alpha for the day. Stay safe and happy trading.